Hi guys, last week we talked about the home insurance. Now we switch to life insurance because right now life insurance market is hot. A lot of agent or agencies they used to be doing PNC, which means property and casualty. Now we're switching to or focusing on the life insurance. So we need to understand one thing in this video. We'll be talking about how to read life insurance illustration. Okay, this is very important. A lot of people they bought a life insurance, they received the life insurance illustration, they put it aside, and they never bother to read it, and never bother to understand it. But it's very important, especially there are two kinds of life insurance illustrations. One is for quoting purpose, that has no binding power. Legally, it's not binding. It means that you can change it. They can change it without suffering from any legal consequences. But then we have a formal illustration. That's final, that's a part of a contract, and that legally has a binding power. So you have to understand that there's two kinds of illustration. When you receive the life insurance illustration, usually in the PDF form, they will tell you the name of the insurance carriers and the name of and address of your insurance agent and the name of the insurance policies. For example, it's whether it's whole life insurance or universal life insurance. Uh, Notice that if you only have a term life insurance, usually they won't give you life insurance illustration because term life is very easy, it's straightforward, there's no cash value involved, just a death benefit, that's all you get. And so there's a, but if you're buying a life insurance, whole life insurance, a permanent insurance, uh, universal life insurance, they will have the illustration. So the first thing to look for is to look at the life insurance carriers, their financial strength. The financial strength is not that they say how strong they are, but there's a rating agencies like the most famous one in for life insurance carrier is called AM Best. Okay, then we have a regular credit rating agencies like the Standard Poor and Fitch's, things like that. But usually the highest rating for life insurance carrier is A plus plus. You can't go any higher than that. Okay, that means that if the company has an A plus plus rating, that you can rest assured that you don't need to worry about them being bankrupted or insolvent. Okay, so A plus. How many companies have in the A plus plus? We have quite a few. We have like John Hancock's. We have like Transamerica. We have like New York Life, MetLife, State Farm Life. And Lincoln Financial. Quite a few others. So but even if the company is rated like A plus or just A, I don't think normally you need to worry about it. Technically speaking, you do because life insurance contract it's a long-term contract. It could be like it goes decades, like 3 decades, 30 years, right? Who knows that some company will survive, will still existing 30 years later, right? So technically, you should pay attention to that more so than the other, like PNC insurance, because PNC insurance usually comes by years. And each year they have renewal, and if it's auto insurance, even shorter, they renew that every 6 months, right? So you can pretty much predict that whether they will exist or not. But for life insurance, it could be decades. Okay, so that's why, technically speaking, you really need to pay attention. Otherwise, you may not get your money back. There are two cases that people are often confused. One is called the some company become insolvent, and another is that some company, financial institute or insurance companies, they become bankrupted. Those are the different things. Insolvency is a financial status. Bankruptcy is a legal process. Okay, so if insolvency means that the company does not have enough money or enough resources to pay your covers, so by the end of your life that you died, your loved ones will not get the money because the life insurance carrier has no money to pay you, then that means you're in trouble, right? But actually, not too bad if you think about this. Just like in the banking business, we have FDIC. Everybody knows that because every bank they will always say we're a member of FDIC, right? But the similar things, although not as famous, is that called we have something called the state guarantee fund. Every state has one. Okay, so how much money they cover? In the FDIC for the banking, we cover up to 250,000 dollars. Okay, but for the individual life insurance contract, they pay actually more than that. They pay up to $300,000. Okay, but bear in mind that for you may only have like a $10 in the bank, so I don't think you need to worry about the upper limit of 250,000. But for the life insurance policy, the death benefit, the final payout could be millions, multi-millions, right? At least you have like 50,000 or 500 grand and 1 million, 2 million, 3 million. If it's an individual policy, they pay up to $300,000. It's a group policy like group annuity, they pay up to $5 million. If it's a long-term care, they pay up to $500,000. So those are the limits. So normally you don't need to worry about that because for one reason is that we rarely have a life insurance carrier who become insolvent. Number one is because it's a heavily regulated market. They want to protect the consumer. Number two, we have a state guarantee fund, right? So, and then you may want to ask where the money coming from for the state guarantee fund. The money actually, just like in the PNC insurance, in the fair plan, all the insurance companies doing business in California, they contribute the money to that fair plan. The same thing for the life insurance. The state guarantee money. It's also a private syndicate. The money coming from all the life insurance carriers in the state. So that's why they provide incentive for the insurance companies to follow the rule, because otherwise other people will pay for your loss. So that's one thing that you need to worry about.